Cathie Wood and Elon Musk brace for Great Depression 2.0. Well, Michael Burry and Warren Buffett just bought some stocks. According to the 13F filing from Michael Burry, the legendary Big Short investor went long on the most recent quarter, added 5 stocks in his $41 million portfolio. Keep in mind, although he has added more stocks into his basket, this is not his normal portfolio size. What is his normal portfolio size in a healthy economy then? I promise to tell you later, okay? We have Mr. Buffett now has finally decided to buy a stake in a semiconductor company. This is not just any semiconductor company in the US. In fact, this one isn't even located in the US. This one is in a hot spot, overlooking the ocean where you can find Chinese mainland. Yes, he decided to buy TSMC now. Well, I guess Buffett didn't sell his airline back in 2020. Oh yeah, he did sell most of his airline shares. Maybe the war is canceled. Why is Cathie Wood and Elon Musk worried about another Great Depression? Are we not on our way to the all-time high in this pre-Santa Claus rally? Or maybe that's too premature to talk about it right now. I will let you know all the details about everything I just said right after this. And of course, smash the like button. If you want to be my good boy, apply to write your first book with me. Welcome back to the Audacious Money Witch channel, where we talk about macroeconomy, stocks, bonds, and commodity markets. If you like any of these topics, you are intelligent. That's why you're here. And you know what to do, and push my button if you like what you see in today's video, because I can't push it from this side. This video is brought to you by my Patreon. If you are a good boy, go to patreon.com/magicalgoddesscheryl to add more meaning into your life. If you play your cards right and completely submit like my good boys do, then I will take you under my wing. Author of best-selling books, Goddess Cheryl. My good boys always get rewarded handsomely. You are such a good boy. You like hearing that, don't you? You want it to be real. You want it to be true. You need to be my client, don't you? The U.S. Federal Reserve runs the risk of sparking a major U.S. downturn, just like the Great Depression. If it does not pivot from its monetary tightening path despite cooling inflation, ARK Invest CEO Cathie Wood has said. Wood drew parallels between the current situation and the events that led up to the Depression in 1929 in a string of tweets Saturday. In June 1920, the global economy was just working its way out of the impact of World War I and the Spanish flu outbreak of 1918. Which contributed to supply chain and other shocks that pushed up inflation to 24%, Wood said. To cool inflation, the Fed hiked interest rates sharply from 1919 to 1920, from 4.6% to 7%. She further noted, this took inflation down to about negative 15% in June 1921. In reaction to the deflation, the Fed then lowered rates sharply from May 1921 to July 1922, prompting a massive rally in the stock markets. and tripping the switch for the roaring 20s, she said. The central bank then raised rates in 1929 to curb market speculation, a move which, together with the Smoot-Hawley Tariff Act, contributed to the Great Depression. Wood said in her thread on Twitter she saw echoes of the same in Fed's policies now as the central bank is ignoring deflationary signals. This time round, the Fed has already raised interest rates 16-fold, which Wood felt was a serious mistake. The Fed has hiked interest rates from the 0.25% to 0.50% range in March to the 3.75% to 4% range now to cool inflation, which rose 7.7% year over year in October, according to the Bureau of Labor Statistics. But Wood expects broad-based inflation to turn negative in 2023, she said. If inflation drops below the Fed's 2% target and economic activity disappoints, then interest rates are likely to surprise on the low side of expectations next year, ushering in this century's rendition of the Roaring Twenties, she said. She also drew parallels between the Smoot-Hawley Tariff Act and the CHIP Act, which was signed into law in August to bolster chip manufacturing in the U.S., warning it could impact the economy. The U.S. economy is barreling towards a severe recession, and the Federal Reserve needs to stop hiking interest rates or it will exacerbate the coming downturn. Elon Musk has said, "We are headed into, I think, quite a serious recession," he told Twitter employees in a meeting on Thursday. According to The Verge, Musk added that he expects the economic slump to last a year or two. The Tesla, SpaceX, and Twitter CEO pointed to the recent surge in companies laying off workers as evidence of trouble ahead. He also noted the excruciatingly difficult task of keeping his businesses afloat during the dot-com crash. And financial crisis has traumatized him, making him paranoid about recessions. Musk has been issuing similar warnings for a while, including in his first email to Twitter employees as the company's new owner. Frankly, the economic picture ahead is dire, especially for a company like ours that is so dependent on advertising in a challenging economic climate. Recession fears have mounted this year as the Fed is actively trying to cool the economy to curb soaring prices. Inflation surged to a 40-year high of 9.1% in June and was still 7.7% in October, well above the Fed's target rate of 2% a year. In response to the threat, the U.S. Central Bank has hiked rates from near zero in March to a range of 3.7% to 4%, and signaled they could peak above 5% for the first time since 2007. Musk has endorsed several commentators who share his concerns. For example, tech evangelist and ARK Invest CEO Cathie Wood tweeted on Saturday that her team believes inflation is cooling and further rate hikes could lay the stage for a second Great Depression. Exactly, Musk replied. He also tweeted, Siegel is obviously correct in September. After Wharton professor Jeremy Siegel rallied against the Fed for going overboard in fighting inflation. Musk personally criticized the Fed during Tesla's third quarter earnings call in October. Fed Chair Jerome Powell and his colleagues have raised rates too aggressively and paid too much attention to backwards-looking data and not enough to forward-looking indicators, he said. Okay, let me tell you about Michael Burry's normal portfolio size in a healthy economy. It is around $200 million size. So $41 million in long position in his portfolio for Q3 is only 1/5 of the size of his total portfolio size. What are the companies he added? Number 1, Curate Retail Group. It's a media company. Number 2, Korev Civic. It's another private prison company. Number 3, Aerojet Rocketdyne Holdings. It's a space rocket defense tech manufacturer. Number 4, Charter Communications. It's a telecommunications and mass media company. Number 5, Liberty Global. It's another telecommunications and television company. Lastly, he tripled the size of his GEO Group, a private prison company. As for Warren Buffett, he only added a $5 billion worth of TSMC. It's not a big deal for him, a small position, probably 2% of Berkshire's portfolio size. Analyst said Buffett may have bought in too early. I think so too. I think we did not just hit bottom just yet. Okay, now I'm going to show you my client Lee Vincent's book, The 3 Most Important Influencers You Need to Meet. I did write the foreword in this book for her. Such an amazing book. And my client Teddy Eazzy's book, Wicked Pussy Perfume. It is an erotic novel. Such an awesome book. Order your copy today. And my book, Time. It is a bestseller. You are such a good boy for watching my video right till the end. Bye.